Alright, okay, good evening everyone. Hey, welcome to today's session over here. So, very quick one, some housekeeping, quick disclaimer on everything that I'm covering in today's session. Solely based on my personal point of view, and of course, they do not directly translate to any form of trade signals or financial advice, right? And of course, I wouldn't be able to take account of your personal risk tolerance and appetite too. Okay, so bear in mind as we go through today's session. So today's session over here would be to talk about the outlook of the market, giving you also a longer term perspective. Okay, going into Q4, even a little bit in terms of moving forward into 2025. What are we looking out for? Okay, good. So with that said, I'll jump into the events calendar over here first. Okay, to cover a little bit on the shorter term perspective, like what we have this week. And then I'll touch on the Q4 outlook, as well as the technical charts perspective. Okay. So if you look at this week, generally we don't have a lot of like high impact news that is super important, except for a little bit on the yen side of things, right? We have some slightly higher impact yen or Japan data coming in on Friday. So do take note, of course. The yen has been pretty volatile in the recent month. Because of fundamental perspective as well, and this volatility would likely carry forward going into like Q4 and even next year. Okay. So this week, we do have the unemployment rate coming in. We have retail sales coming in as well. So this is definitely going to be a little bit more impactful in the market as well. You can see, okay, in terms of the average volatility of this news, statistically speaking, it has generated about like close to 50 to 60 pips on average in terms of movement um, of this news itself. Okay, so that's pretty insightful, right? Because if you are trading this news, you might want to factor in um, how things are going to be built up, right? So for example, if Friday we have like very high impact news, then from now until Friday, probably the market is just going to be a little bit more quiet, building into the news release, and then post event. That's where the volatility will kick in. Okay, so for example, I'm personally looking at an opportunity that is building up on dollar yen. Okay, so that's something I'll be talking a little bit in a while as well. But of course, how do we combine that with the catalyst from a news here? That's where we would then understand as now until Friday, maybe the dollar yen will do a little bit of a consolidation, and then on Friday itself with the news out, that's where we can expect the volatility. Okay, so we can actually combine a little bit on that. Now, I'll go a little bit further into the following week, where of course, I would say like first week of the month, we always would have NFP and things like that. And of course, next month in September, it's also going to be a very crucial month because that's the month where we'll see whether the Fed would actually cut rates. Okay, because the market has already priced in the fact that it, I would say 90%, 100%, it will probably cut it, right? So the market has priced in the cut. Okay, now if we don't get a cut, that is going to be a major surprise, and the dollar may actually strengthen back pretty significant. However, if we're gonna get a cut, it may not necessarily mean that the dollar will continue to drop because we'll then need to assess as to whether this cut is gonna be and moving forward, right? It's gonna be a continuously aggressively cutting, or is it gonna be a cut once and then we wait for some time before the Fed decides to cut another time. We need to see if there's any forward guidance from the Fed after this cut, if it's gonna cut it, right? So, if it's not gonna be some sort of an aggressive cut, right, then what will happen in the market generally profit taking, and we'll still see some rebound, right, and that's why you have that phrase, sell the rumor or buy the rumor, sell the fact sort of idea behind it, okay, which is basically profit taking, right? Because if everyone priced in on the decision, and the decision is just as it is, it doesn't really have any surprise element, um, then you would expect profit taking and the market will probably still retrace. Okay, so that's something to know. Okay, and again, the more interesting part here is we're starting to see some sort of a policy divergence, right, between most of the major banks plus or say against the Bank of Japan, right, where Bank of Japan is kind of increasing rates, whereas everyone else is talking about cutting rates. Okay, so going forward on Q4, going into next year 2025, there's a general direction you can look out for in terms of the fundamentals. Okay, where you want to be primarily looking at the yen strengthening and primarily the other pairs against the yen weakening. Okay, so moving forward, there might be some very clear trend opportunities that we can leverage on. Okay, like dollar yen is one. And of course, if you're looking at dollar potentially weakening, then equities indices can be interesting to look at. Commodities can be pretty interesting to look at as well. Okay, so that's the overarching view, right, in terms of like the bigger picture perspective. Okay, so today over here, I also walk you through like some of the higher time frame view perspective. Okay, so of course with the idea that the U.S. Federal Reserve, right? Let me just open up a new chart so that it doesn't really like disrupt my current drawings. Okay. All right. So if you look at the dollar index on the really stretch out perspective, okay, how far can this drop? Okay, what is the room to the downside that the dollar can really continue to head towards, right? I mean, if I'm being very conservative, there are two ways we can measure it. One is utilizing an equal leg 1:1. Basically this puts in from wave perspective, a simple WXY. If I'm a little bit more conservative, I would be able to take it just with the 127 extension, right? So that will put it a little bit more on the conservative area in which price can it actually head towards, right? But nonetheless, this is the zone that you want to keep an eye on for potential downside. Okay, and we're not talking about like by the end of this year, maybe this might stretch into going into Q1, Q2 of 225, right? Because as the Fed continue cuts, we're probably going to see continuation weakness in the dollar itself. Okay, towards 97, towards 93.3 zone. Okay. Now, we can also do a little bit of time projection, right? So of course, this is not going to be like the most precise way of measuring it. But this kind of drop here kind of took, let's say, about 283 days. If I just measure this somewhere around 135, kind of duplicate that and measure it here. Okay, that will put us around by end of this year. Okay, so I don't expect this kind of drop here happening as equal kind of volatility, right? So I mean, if you give and take a little bit, all the way until maybe early mid next year, that's the time duration you probably want to give yourself, in view of price hitting the target eventually. Okay. So that's something to note from a larger time frame perspective, right? Now, if you go down to the lower time frame and start to monitor in terms of like, do we want to be selling the dollar this week in view of the higher time frame perspective? Probably you don't want to be selling it at where it is, right? However, if we can get some decent pullback towards this zone, okay, around 102, then that will be a better area to consider selling it. Okay, but of course you also want to bear in mind the dollar has been coming down quite a bit. Okay, so what we are looking at here possibly, what's very obvious to me is potentially that's a structure that looks something like that, right? So from this swing high here, we have a 1, 2. This is pretty impulsive, so that can be a 3 or say a third wave down, right? So fourth wave here may actually pull back towards potential territory around here, okay? And then that would open up a one more push to the downside, right? So with that in line, right, potentially what we can expect is perhaps, you know, with September we may still get a cut, but as I mentioned, you know, that cut may not be really aggressive moving forward. You know, maybe it's a cut and wait and see kind of like approach. Then we may have that profit taking, and then the market may pull back a little bit. Okay, so depending on how you're gonna, you know, engage in trades, right? You can consider like if that's gonna be the pullback phase, would you be looking at buy here at a short term and then sell it after which? Really depends on your individual trade plan, right? So that's the outlook here on the dollar I'm giving you. Okay, so I think it's quite straightforward in a way, right? Long term, my expectation is the dollar continue to weaken, but going into September or maybe October, you just want to be cautious in terms of potential profit taking. Okay, where we may see the cut, but after the cut, if the Fed takes a wait and see kind of approach, then the dollar may strengthen a little bit back up. Okay, so that's on the bigger view on that. Then we have euro dollar. So again, if I kind of stretch it out a little bit on the higher time frame perspective for you first, the euro dollar actually has been, you know, in a consolidation at the moment, right? If you look at the daily scale, right? Now this consolidation would eventually print a high probability to the upside, right? The question here, of course, is I mean, dollar index is a little bit clearer because we are looking at the basket of dollar and generally is dollar dominated, right? But euro dollar may not necessarily be just driven by the dollar itself, right? I mean, the Fed can cut rates, dollar can weaken, but if the ECB also cut rates, the euro may not be, you know, as strong or stronger than the dollar by much. Right. So if you look at euro dollar as an independent currency pair itself, there's a possibility that we are seeing this as a three wave here. This may actually come back down, tag this low, okay, then only the push up. Okay. So I think euro dollar, it doesn't necessarily mean that, oh, the Fed cut rates and then therefore euro dollar would just push higher, right? Not necessary. Okay. So from a technical perspective here, this is very clear one cycle. Okay. There's a possibility this is a 1 2 3 here, so this one here the market may come back down, as I mentioned, retest this, then only push. Okay, so at the moment the course, if I zoom in a little bit, okay, at the moment the course we are kind of like testing that high already, right? Haven't really kind of like give us a very clear confirmation, but the market is testing this high. I would be first priority here is to see if we can get a rejection back down, and if it does, I'll be more keen to see if it can actually come back towards this zone or even this zone. Okay, so that's my primary outlook for the euro, or say euro dollar, going into Q4 this year. Okay, so I think that's something more interesting to look out for in the downside first, right? I mean, if the market continue to go higher and take out that high, then that's a different story, right? Okay, because if the market takes out that high, then we need to relook at that. This may be a triangle, and this may be the move to complete this, right? So there are different possibilities, okay? Some traders see it as being very, very subjective. But if today you are just being adaptive with what the market is telling you, then you're opening up yourself with more different scenarios planning, right? And that's actually a strength as well. Okay, so euro dollar, two ways to look at it. As I mentioned, one is something like that where we can potentially look for downside. The other scenario here we're looking at is this is a triangle structure. Okay, and this is actually starting a new leg up. Okay, so the confirmation on this is that for price to break this high, if you break and close above that, then there's a very good possibility this is a triangle structure. Okay, so that's the look on euro. GBP USD, again, I would say very, very similar to the euro right now, right? We kind of have this tiny little break. Okay, Very impulsive move, obviously on the lower time frame. So moving forward, again, this will be bullish, right? But whether you're gonna be buying here, probably wouldn't be, right? I will always wait for that pullback. Okay, maybe this pullback will come in somewhere there. Okay. Yeah, in a way, obviously on the shorter term, there's really nothing much on the pound. Okay. Yeah, so this one probably going into Q4 right now. Nothing really standing out, okay, for the pound dollar. Aussie, double top formation as of now. Potential, okay, double top. So Aussie here, I'll be more inclined to short-term wise look for opportunity to see if we can get the downside. Let's see, okay, I mean, sorry, daily. Yeah, I mean long term, I think this one here doesn't have much clarity. If you're looking at long term, again, euro dollar may have a better opportunity there, clearer kind of structure. Long term wise, Aussie dollar nothing there. H4 wise, shorter term, potential double top. Okay, again, wait for confirmation from the market and see how it goes. The thing here is, if this is gonna be a double top, we want to see an impulsive rejection. Okay, until then, it's just a possible double top. It's not a confirmed double top, right? So that's on Aussie. Okay, dollar CAD. Hey, dollar CAD I think is pretty clear. Definitely you want to focus on the downside here with a target back towards this area. Okay, the market hasn't been able to take out that high. Okay, so dollar CAD quite clear. Going into Q4, going into next year, the general direction is down, right? Obviously, it's not going to drop every other day. But some days, or even weeks, you may get that pullback. But overarching direction, downside. Okay, so this area is somewhere around 1.32 zone. Okay, so dollar CAD bearish, right? Again, that will be very much in line with the weakness on the dollar itself. Okay, so this one I think is a very, very clear structure on the H on the daily. Okay, now if you go down to H4, again, you may not want to be selling it at where it is right now. It's at the low. It's very hard to actually put in your risk to reward ratio, put in your stop, and manage your risk. So you want to wait for that pullback. Okay, but any sort of a pullback here, you can start to consider looking at the sell. Cool. Okay, I think this one is very, very clear in terms of direction. Now, obviously, yen here is also very, very clear. If I can zoom out, I mean, very, very conservatively, that's a low. The other one is here. So if you ask me, going forward into next year, going into Q4, going into next year, direction is definitely downside. Okay, but of course, take note of this area here. I think the market may give us some sort of a bounce first, then only another drop. Okay, this leg may be completing soon, right? As a impulsive A or 1, and then this will be B or 2, and then we'll get 3 or C. Okay, so general direction on the dollar yen is super clear. But in terms of like trade perspective here, definitely you want to go down to the lower time frame and look out for things. Okay. Now for me, I'm looking at this as a 1, 2, 3, 4, and potentially 5th wave is in development. Okay, which means that this one here can be wave 4 done and completed. Alternatively, this can be a 1, 2, and then 3 as well, right? So this can still do something like that and come back down, and then wave 4 will be here. Again, we wouldn't know 100% like what is what, right? Or which one would likely develop. But what we can only do is, of course, trade accordingly, right? And then manage the trade accordingly. Okay. So the idea here is, if you're gonna take it as wave 4 here is completed, okay, then of course any pullback you look to sell, because then you'll be expecting price to break that low eventually. However, if you can't expect this as a 1, 2, 3, okay, then of course you wouldn't want to be selling around the zone. You want to wait for price to come here, and then you look for sell at the top. Again, I won't know the answer, but I'm just sharing you what are the possibilities you can prepare for that. Okay. um, yeah. So that's on dollar yen, right? Essentially, you're looking at downside. General direction is downside. It's just a matter of again, um, which scenario will play out. Where are you gonna sell it? That's about it. Okay. Gold here in terms of longer time frame perspective, is definitely upside, right? I think going into Q4, going to next year, gold would likely make highs. Okay. I mean, if you look at the general trend, is up, right? It's definitely up. But this current development here, right? You want to be careful because this looks like this on the daily scale, right? So this looks like we may see some sort of a pullback and then only push out, right? So the market probably would need some sort of a reset, right? Or we call it retracement, right? So if you look at patterns in the past, there's something like that, and the market come back and then only pop, right? Kind of having that similarity here, right? So you pop, then after that pulls back and then pop again, right? So you have a pop here, you have a pullback, and then another move. So that's something I'm looking at in consideration, of course, with you know, the market seems to be slowing down as it approaches to the upside. So yeah, I'm bullish bias obviously on gold, but just bear in mind that okay, we might see some sort of a pullback first. Okay. Yeah, so short term here, you may consider that sell, but eventually the longer term direction on gold is definitely bullish. Okay, crude oil, daily point of view. This is really very choppy on the daily. Yeah, 4 hour, I think, at least in the near term, it's a little bit clearer that the market may be reaching this top. 1, 2, 3. Okay. That's perhaps one of the clearer ones on the lower time frame. But other than the H4 perspective, daily here is not clear, right? I mean, not clear in terms of like what pattern structure it wants to develop. Yeah, so crude oil here on a short term. Okay, this is like maybe within the next 1 or 2 weeks, potentially will reach towards this target. But that's about it. Okay, so maybe crude oil long term here, really nothing much that we can look into. S&P daily. Okay, so S&P on a macro fundamental perspective, we're gonna be expecting upside. Okay, so I see over here someone mentioned crude is in a triangle. Probably, right? Because yeah, that's a possible thing. Okay, because again, when the market is like in some sort of like consolidation, yeah. Okay, so I don't really trade the triangle. Yeah, so that's it. Okay, nothing much on that. Okay, yeah, I was talking about S&P. So S&P over here from a macro perspective, right? I'll be looking at upside. Okay, I think when interest rate starts to get lower, I mean it may not be like immediately when the Fed cut rates and then this pops, okay, to the upside. But in the lower interest rate environment, if the Fed is kind of cutting it steadily, and not because of like major recession and things like that, right? If the Fed is just basically lowering interest rate in a very calm environment, it's actually going to be beneficial for the S&P. Okay, because in a low interest rate environment, money is cheaper, and when money is cheaper, people borrow and then pump into asset classes that tends to give them a higher yield. And of course, naturally, S&P index or equities will be one of it. Okay, so the demand on that will actually spike, and that will then obviously translate to higher prices. Okay, so from that angle and that perspective, right, I think S&P here would potentially continue to break highs and make new highs as we progress into 225. So same thing here, I'm going to be bullish on equities, and I would simply say that any sort of a pullback um, would actually give you a buy opportunities, right? If you're kind of looking at investing, then maybe things is a little bit different, right? If you're looking at investing now, if some of the prices are high, okay, may not be the best time to get in, but then again, same time, some of those stocks that pop, you may not get a deep retracement. Okay, so um, yeah, so investing is another thing, right? It's slightly different from trading because I would say investing timing wise is not that crucial. Okay, but if you're trading, of course, your timing is important because you want to kind of lower your stop loss, right? You want to minimize your stop loss, so your timing is important. Okay, so S&P as of now in the near term, there's really nothing much to talk about, right? This here is pretty ugly. I would personally want to wait for some sort of pullback, okay, before you buy. But I think the general direction is very clear on the index. Okay, general direction is very clear on the index. Okay, I would skip the other yens. My primary focus is always going to be just the dollar yen. Okay, because I think the other yens are just going to be pretty similar to the dollar yen in a way. So in terms of like overexposure on the yen, is something you want to take note as well. Okay, so I'll just skip the other yens there. Then we have pound odd. Okay, pound odd over here. General direction is bearish. Okay, from a technical point of view, it's pretty clear on a H4. If I scroll out a little bit, okay, we have this massive kind of a little bit of a wick here. You can see, right, huge wick. Try to break that, and then the market just came back down. Okay, so if you kind of stretch it out, you can see where would potentially be areas of target to the downside. Okay, so we have really a lot of downside opportunity here we can capitalize on, right? So higher time frame here suggests direction is down. Lower time frame, zoom into the H4, you can see how the market broke that, tested it, didn't really break above, right? So I'm continuing to expect this would come down, right? So bias here is bearish. Okay, and of course, again, depending on how you're looking at in terms of your setup, okay, you'll be interested to look for sell side. Okay, yeah, so this one should be quite clear, right? Good. Cool. So that's on pound odd, right? I think pound odd is one of the nearer term opportunities that you guys can keep an eye on. Okay, Euro CAD here, I'm also looking at opportunities for the near term. Again, on the daily scale, we have the market kind of testing that. I don't think that's a very solid break, okay? Because on the H4, yeah. Okay, on the H4, we're seeing this move here pretty corrective. I mean, right now it's doing a push down already. Let me just zoom out a little bit more, see where this can potentially take us. Yeah, okay. I mean, on the daily scale, there are some clear areas that we can look out for. Okay, yeah, so those are the two areas I think, if you're looking to sell here, again, don't sell it now, obviously, but I think this break, as of today, gives us an opportunity that any pullback here in the near term, you can look for sell, right? So this is a little bit more of a shorter term outlook, right? Whereas some of the others I share is more of like going into end of this year, going to next year. This one is more like within the next maybe 1 month. Okay, that will be the opportunity here. Potentially even more. Okay, so Euro CAD, definitely downside. Okay, we get this move here as of today, kind of like give us a little bit more confirmation, right? Because this move here is with momentum as of now, right? So if you look at the hourly price actually take out this low, break and close below as well. Okay, so in a way, if this pulls back correctively, that will be an opportunity to sell anyway. Okay, so yeah, some of the shorter term ones that you can keep an eye on is like pound odd, euro cat. Cool. Then we have Bitcoin. Okay, so Bitcoin over here, if you ask me on the longer term, bullish. Okay, I think no doubt about that, right? The pattern structure is quite clear here. Okay, this pattern structure is very clear. Impulse, correction, and not only that, we had a little bit of a, liquidity sweep, and the market push higher, right? So there's a good possibility we have formed the low and then likely more upside. And with this push here, there's a very good chance that Bitcoin would actually break this and make an all-time high, right? Like how high, obviously, we won't know. But that gives us a very clear directional bias, which means that any pullback in the future correctively would present a buy opportunity, right? Which means that as long as price remains above this, right, if you can get a pullback, look for a buy. Okay. Yeah, so that's Bitcoin in general. Long term upside, near term look for buy opportunity, right? I think that's the alignment that we get on Bitcoin. Okay, Euro Pound and indices. Let's take a look at the Euro Pound first. The Euro Pound recently came down quite strong. Okay, daily is just ugly. Yeah, this coming down is quite strong, but again, we are approaching an area here where previously the market had a little bit of consolidation and then a pop, right? So we're kind of testing that. So I'll be cautious in the continuation downside, because if the market gives us some sort of a reaction here, we may actually see a bounce back up. Okay. Yeah, so Euro Pound, that's my take. Probably not the cleanest pair to be looking at, but of course, the opportunity comes in where we get a bounce, right? Because you can see the market actually made some low here, does a bit of consolidation and a very strong push, right? So we break that high with this kind of like consolidation. So I would expect some sort of reaction here. If the reaction is a bounce back up aggressively, then obviously we'll be looking at upside. Okay, so that's on Euro Pound. In terms of general indices, right, let's take a look at the global index market. S&P, I think we cover on that. NASDAQ would probably follow suit in terms of the overview. Okay, same thing here. Any sort of a consolidation pullback would be bullish in general. Dow Jones is already trying to break that high. Yeah, I think US equity is generally gonna be bullish. Okay. German DAX pretty strong as well. Kind of similar to S&P in general. Okay, so I think if they are similar, right, the top process is pretty much the same, right? Wait for a pullback and then upside. Okay, the only thing that from a macro angle perspective is it's easier to analyze the Fed and the relationship to the US indices compared to the macro of like other major index, right? So other major index is probably more of like technical perspective. Okay, other than maybe the A50, right? Because China market is currently very different from the developed markets. Chinese economy is kind of struggling at the moment. Okay, and the Chinese government is looking at easing policy. Okay, with a different reason as compared to the Fed cutting rates, right? The Fed is cutting rates not really because the US economy is terrible, but it's because, okay, inflation is more or less controlled. We don't want to maintain rates so high because that will have a negative impact in the long run in terms of economy, and therefore it's time to cut, right? So the Fed stance is like that. Whereas in the Chinese economy is like, oh, the Chinese economy is really not doing well, and then we need to cut, right? So you can see the origin of why they're cutting is very very different. Okay, so that's why you can see equities in China is not really performing as well. Okay, because the economy is just not doing well, right? So since we're on this, right, A50, what's my look on this? From a technical point of view, right, there is the possibility where we can see more downside, to be honest, right? Because the market hasn't really take out significant highs yet, but if the market can pop one more time and take out this high, then we may actually see this as a bottom, and this may have completed for more upside. But until that, right, if price is still not able to break that and just continue to trickle down, there's a good possibility we'll see more downside. Okay, so that's A50. FTSE here, I think also bullish in general, right? I mean, developed market seems to be quite similar. So any corrective pullback, look for it upside. Aussie, pretty much the same as well. Okay, I think developed markets, going into Q4, going into next year, there's a very good possibility we'll break new highs. Okay, I think that's generally the market direction. Same thing here as well in terms of Switzerland, right? So we'll be looking at upside, yeah. Okay. Yeah. So over here, someone asked, can you give an example of neckline and head and shoulder pattern? Sure. Let me take a look at that. Okay. Okay. I'll use this example here that is completed, so it's easier to take a look at. Okay, so this one here you can see, right, the market make a move up. Of course, if you have confluences of like previous support resistance, that would add up to that as well. But the first thing here you want to always look out for is double top or double bottom, right? In a way where oh sorry, you are looking at head and shoulder pattern. Okay, I was always thinking of like double top, double bottom. Okay, let me find out a head and shoulder pattern for you. Let's say if I can get one that's obvious. Maybe I'll zoom out a bit, sorry. Okay, not the cleanest, to be honest. I'll look at this here maybe, right? Okay, I'll need to look at historical ones, right? Because they have been completed and therefore it's easier to actually show you how they look like. Okay. Yeah, so if you look at this here, what we have is we have the market coming down, right? And then it starts to form lows, right? And then a very traditional head and shoulder pattern is you want to have a low here and then two lows that are a little bit higher on the left and right. Okay. And then of course with that, you start to draw a neckline to connect all these mini highs, and then that becomes your neckline. Okay. So the confirmation of a head and shoulder pattern is when price break your neckline. Okay, when this actually breaks to the upside, that's your break of a neckline. The conventional way of trading is obviously take the head, measure it to your neckline, and then you duplicate that and measure the breakout. Usually that's where your target is. Okay, usually that's where your target is. So that's how you look at for it. Yeah, so that's the head and shoulder pattern. I mean, this is more of an inverse head and shoulder, but you basically just mirror that. You flip it opposite, then that's your head and shoulder. Right. US 30 and NASDAQ, I think we cover on that, right? In general, I mentioned that the direction is upside, pretty similar to the S&P in general anyway. Cool. Yeah, so this one here upside. Basically, direction on the index, okay, it's gonna be bullish. Gonna be bullish, okay. So basically, the idea is just look out for opportunities to get involved in the buy side of things for equities going into Q4, going into next year. Cool. Okay, so that's all from me for today's session over here. Giving you guys hopefully the bigger picture perspective in terms of the outlook. Okay. But of course we also cover a little bit on the nearer terms ones, right? Where you can look to trade maybe within the next couple of weeks, and then the bigger, longer term perspective outlook, so that you can also plan for it, going into Q4, going into next year 2025. Cool. Good. So that's all from me. All the best for your trades, right? Of course, to end off this year and then going into next year as well. And we'll see you guys in the next session. Okay. So next week we'll be rotating back into our regular market outlook. Yeah, just once a month we're doing a little bit more in the longer term kind of monthly outlook kind of like perspective. Okay. So yep, that's all. All the best. And I'll see you guys in the next session. Okay. See you guys. Bye bye.